Get an interview then from Dominic Schnider, who's head of commodities and head at APAC Forex Chief Investment Office at UBS Wealth Management. Dominic, hi, welcome to the show. What's your sense on the gold prices now? Do you agree with what our experts are saying that we could see some near-term gains here?
Well, precious metals, I was highlighting that we are quite neutral in the short run, sideways. We have pulling factors. There is some demand from speculative accounts. Specs accounts in futures and options actually have built up quite nicely, some long position. Net lengths actually advanced quite a fair bit. Actually a level you can think about exiting a trade if you held them a long position. I think over the medium term, the most important story is monetary policy. If the U.S. economy continues to improve, things trend better, employment goes better in the U.S., wage and earnings are improving from consumers, I think then monetary policy in the US can continue to normalize, not just on the QE side, but at some stage you might have a little bit of a hawkish tone down the road, not probably over the next 3 months, but 6 months, and then you can have easily ETF selling, specs accounts reducing their net length, and with Asia demand on the soft side, you're going to see gold coming off again. We're targeting $1,200 an ounce. That's what we have over the next 6 months, and if monetary policy in the US continues to advance a little bit more rapidly, then I think into 2015 or mid to the end of 2015, you're looking at a gold price close to $1,050.
Dominic, also, how would you look at the base metal space? Because in pockets it seems to be doing quite well, especially with the strong data coming in from China and US.
The base metals actually have done remarkably well over the last, I would say, several months, and that's related to the recovery that we've seen in China. China has accelerated a little bit, in some cases, beyond expectations, and that has given many of the metals a lift. They were already downbeaten quite a fair bit, so I think that should be quite natural that they do well. I think the uptrend that we have seen right now in the base metals is starting to mature, so would be a little bit careful where you allocate. So a position, let's say in aluminum, maybe should be cut. Should also cut an excessive position in zinc. We still hold a neutral position in copper, and I think nickel can do well, but that's more of a supply story that is affecting nickel, can even push prices to $25,000 a ton. So be quite selective in the metals in the current environment.
Dominic, what's your expectation or sense from FOMC meeting now, and what do you sense an impact on flows onto EMs?
Well, looking at monetary policy in the US has really been sticking to the playbook recently, so no negative surprise, clearly indicating it is supportive for the economy. And as long as US monetary policy doesn't come too hawkish and yields spike at the long end, then obviously it's still supportive for Asia. Asia has its structural growth, even though it might be a little bit more moderate due to some structural factors. But I think as long as monetary policy in the US is very loose, the way it is right now, it's still good for us. So I don't think there's any threat for, let's say, emerging market from US monetary policy in the current environment. At some stage when we see, let's say, unemployment rate coming off even more, if we see more income on the labor side and monetary policy needs to get tighter, that's maybe a little bit of a challenging time for Asia, emerging market overall, but that story is not around, I would say, over the next 3 months. It's more of the 6 to 9 months.
All right, Dominic, really appreciate you joining us. So that's the view coming in from UBS. No surprises expected from US FOMC meeting in this week. But with that, let's go for a break. When we come back, we will have a detailed check on the RG space.